Ladies and gentlemen, the bank runs in the US is just getting worse. We've got new reports, I've got new charts to show that we are seeing a massive bank run, but the mainstream media, the central banks, the government, they do not want to tell you. They don't want to cause panic. They want to tell you the system is fine, it's strong, the banking system is resilient. But numbers don't lie, the data doesn't lie, and we've just got new shocking information that shows yes, there is a full-on bank run happening in the US banking system right now, and this could possibly be your last chance to get your money out of the banks right now before it all goes under. So everyone, this is going to be one of my most important updates yet, so let's not waste any time, let's get straight into the news, the facts, and the data. Okay, first things first is this, but I've got many more charts and information to show you, everyone. I've got so much juicy information, you can't miss this. Look at this. Massive retail money market inflows suggest bank deposit run is accelerating. So one thing we're seeing right now is a lot of people are very unhappy with the interest they're getting on their bank deposits. So what they're doing, or what normally happens, is the big money, the smart money, well, they'll take their money out of the bank and put it in a money market fund where they can get a pretty low risk return of around 4 or 5%. But now even the retail depositors, the average Joe and Janes, maybe they're watching these YouTube videos, they're becoming aware they can put their money in a money market fund and get a much higher return. And so this is adding on fears where other people were withdrawing their money because they're worried the banks could collapse. But also now you're having a double-edged sword where people are putting their money out of the bank to put it in a money market fund to get a higher return. The answer is not a good sign for bulls, as money market funds saw 47 billion of inflows, pushing the aggregate to a record high of 5.31 trillion. That is over 100 billion of inflows in 2 weeks. And we can see this chart here of how much inflows are accelerating. But the interesting thing is where this money is coming from. Look at this. The breakdown was 20.7 billion from institutional funds, but even greater was 26.4 billion from retail funds, up dramatically from 4.9 billion last week. So this is a huge shift, everyone. We've already seen the big money, they've taken a lot of money out, but now we're starting to see the retail depositors, they're putting money in, and they're putting money in massively. There was 5 times more inflows this week just compared to last week alone. This surge in money market fund inflows strongly suggests that tomorrow's H8 deposit report will show the bank run is accelerating. Well, people, I've got a chart to show you from the Federal Reserve themselves, and this is very worrying. So look at this chart, everyone. This is deposits of all commercial banks. Now we can see they hit a high of around 18.1 trillion on March 16th, 2022. But since around August 2022, we've seen deposits continue to fall, and they've fallen all the way from around 18.14 trillion all the way down to 17.1 trillion. So $1 trillion of deposits has been wiped out. And this is the biggest amount of deposits that's been withdrawn on record. We can see here, every single year it normally goes up. But for the first time, we're seeing deposit flight like this, and it is frightening. They go on to say, however, the most anticipated update of the week is the H41, and that showed the world's most important balance sheet, the Fed's balance sheet, will shrink for the 6th straight week by a sizable 58 billion. So that's right, everyone. This is the Federal Reserve's balance sheet, and every time this goes up, the markets go up. And we can see here when there was worries of the banks collapse in February, they actually increased their balance sheet when they're meant to do quantitative tightening, selling assets on their balance sheet by 400 billion in a month. But we can see here they are now starting to sell off again. So I think this is why we're seeing more downward pressure on the stock market, and I'll go over that in a little moment. And we did just get news that the ECB, the European Central Bank, they lifted their interest rate by 25 basis points, 0.25% yesterday morning. So this is going to be more pressure on the banks. There's lots of questions at the ECB press conference about the banking crisis happening in the US. Of course, they're trying to tell you, well, look, the European banks are fine. Unlike what happened to Credit Suisse, there's nothing to worry about. But this is going to be more pressure on the European banking sector. And the ECB went on to say that inflation is still too high. There's not going to be a pause. They're still going to continue to lift interest rates, and specifically food inflation is far too high. Food inflation in the European zone is at 13%. That's down from its peak of 15%. This is absolutely unsustainable, and this is really going to hit the poor and the middle class, and they need to do some drastic action to bring it back down to their 2% goal. So you think they're going to stop at 4%, 5%? No, their inflation is far too high. It's too entrenched. They're going to have to go to 6, 7, maybe even 8%. But look at this new report that just came out to show that Americans are very, very worried about their money in the banks. They don't have much confidence at all. And this is just as bad as like it was in 2008. But the banking crisis is not over yet. So I think this will get worse than 2008. Look at this. Americans haven't been this worried about their bank deposits since the 2008 financial crisis. We'll go ahead and bring up the pie here. We can see 19% are very, very worried about their money in the bank. 29% are moderately worried, 30% not too worried, and 20% not worried at all. But the thing is, this report was done before the failure of First Republic Bank, and now it's very, very likely that PacWest is going to fail. I also think Western Alliance, they're in big, big trouble. There was some rumors that they're exploring their strategic options, like PacWest as well, maybe even thinking of selling. Of course, they're denying this report because they don't want to cause panic. But I think PacWest, they're definitely going under, and I think it's very highly likely that Western Alliance could go down this week. So this shows us that Americans are losing faith, and are losing faith rapidly in the banking system. And I've also got another chart here that I need to show, because what's happening in this chart has never happened in history, just like all the US bank deposits declining so rapidly, and we need to pay attention to this. Well, everyone, it's the old M1 money supply chart. We can see here during 2020, it absolutely skyrocketed from 3.9 trillion to 20 trillion in March 2022. But for the first time in history, the M1 money supply is shrinking, and shrinking rapidly. It's gone from around 20.6 trillion all the way down to 18.9 trillion. So nearly $2 trillion of wealth has been destroyed. So every single time the money supply has shrank, we've always seen some kind of recession or some kind of financial crisis, but it is shrinking at its fastest pace on record. And this is why we're seeing so many bank failures right now, because liquidity is drying up. And also what's going to happen is there's going to be a huge credit crunch happening in the banking system. It's already underway right now. Banks are going to stop lending. They could possibly shut down personal lines of credit like Wells Fargo did in 2020. They could stop or freeze credit cards, and maybe even they can do this. They can call in loans in most loans like mortgages, etc., especially investment loans. The bank can call up the borrower and say, look, we've done a risk assessment. Your loan is too risky now. You got 30 days to repay or find another lender. Because again, let's go ahead and have a look at this report on Western Alliance. Well, everyone, things are getting worse rapidly. Western Alliance Bancorp denies report of bank exploring sale. So earlier in the day, the Financial Times reported that Western Alliance was exploring strategic options, including a potential sale of all or part of its business. Citing 2 people briefed on the matter, the bank said the report was false. Well, we can neither confirm or deny right now whether this report was false, but time will tell. Western Alliance, they are running out of time. They're going to have to come up with a solution quick, because investors are heading for the exits. They're absolutely dumping their stocks. We'll go ahead and have a look at their share price today. So look at this, down another 38%. Yes, you may see a rebound, just some volatility tomorrow. Who knows, time will tell. It's up 6% in the after hours. But look at this, year to date, it's down 68%. Also, what I tried to warn people about yesterday, PacWest, yes, they haven't officially gone under yet, but they will be going under, everyone. They're exploring their strategic options right now. Their stock was down 50% today, and it is down 86% year to date. Now, a lot of people in the mainstream media are starting to wake up to what I was trying to warn people about the commercial real estate sector. The first issue for the banks was their bonds were falling in price, the mortgages were falling in price. The second issue was when interest rates rose, then everyone started taking their money out, putting it in money market funds. Well, the third issue is these commercial real estate loans on their books. They're about to go underwater, and underwater massively. And I think the stock market has finally woken up to reality that no, there's no reason to be bullish whatsoever in the middle of a financial crisis. They thought that maybe the Federal Reserve was going to start cutting, but all central banks are still lifting interest rates. Even Australia, which has been the most dovish central bank, the RBA, they lifted interest rates. So the markets have fallen pretty much every single day this week. They've fallen for 4 straight days, and the Dow is back in a negative territory for this year. So no, like I've been trying to warn everybody, we are not in a bull market. The market got ahead of itself, got a bit too much hope that interest rates will be cut, the money printers will go on again forever, the banking crisis was over. But no, it is not everyone. Look at this, stocks close lower for a 4th day on renewed bank worries, and Dow goes negative for 2023. So the Dow fell 0.86%, the S&P slid 0.72%, and the Nasdaq down 0.49%. Also, for all my gold and silver investors, gold and silver is holding strong. It was up again today, so there's some good gains on gold and silver while everyone's stocks falling. So this is why I always say you want to have a little bit of gold and silver in your portfolio to hedge against these financial crises that come. So everyone, I know you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? What this means is, everyone, there is a bank run happening. Banks are losing trillions and trillions of dollars. The money supply is shrinking. Every time this happens, there's always a deep recession and there's always a financial crisis. And there is going to be more headwinds for the banks when the commercial real estate market crash. And this is ultimately going to mean there's going to be more downward pressure on stocks, and there will be another stock market crash. So be ready with some dry powder to buy the real dips. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.